Hey, it's Nate from Navigator Bookkeeping. So let's say you open QuickBooks to answer that one simple question: did I make money last month? And you can't tell. The number on the screen doesn't match the number in your bank account. There's transactions sitting in Ask My Accountant from March, whatever Ask My Accountant is. Your last reconciliation was sometime last year. So you close the tab, you go back to seeing clients because at least that's the part that makes sense. If that's you, you're not behind because you're bad at this. You're behind because bookkeeping got away from you while you're busy running a practice. Happens to almost everyone at some point. The fix is a bookkeeping cleanup, and it matters a lot more than it sounds like it should. Here's the part most owners miss: messy books aren't just untidy, they're actively costing you money and quietly blocking every good financial decision you'd want to make. So let's talk through both of those. What messy books actually look like. Cleanup is one of those phrases that sounds vague until you see it. So here's what we actually find when a therapy practice hands us a set of books that got away from them. Number one, the reconciliation stopped months or even years ago. If no one has matched your books to your actual bank or credit card statements, your numbers are a guess. A good looking guess sometimes, but still a guess. Nothing is verified, nothing is for sure. Number two, personal and business spending tangled together. The card that bought therapy supplies also bought groceries and a flight that was maybe business, maybe personal. Nobody untangled it, so your expenses are inflated and your profit is fiction. Number three, there's a pile of opening balance equity that never got resolved. This is the junk drawer that QuickBooks creates during setup. If you have a bunch of transactions or even just a balance in opening balance equity, the books were never really finished. Number four, miscategorized transactions everywhere. Owner's pay, logged in the wrong space, a loan deposit counted as income. Each one messes with your profit in a direction that is not true. And finally, the worst feeling, numbers that you just don't trust. This is the big one. If you look at your own profit and loss and you think, that can't be right, you're correct to doubt it and you've stopped using it. A report you don't trust is a report that you don't use. And this is the most common thing that we hear: I can't trust my numbers, or I don't really know what's true and what's not. Again, none of this means that you did something wrong. It just usually means a past bookkeeper wasn't really doing their job, or there was never a bookkeeper at all, and the mess compounded quietly in the background. So here's the first reason a cleanup matters, and it's the one that hits your wallet directly. You're making real decisions on numbers that are wrong, or numbers that are just not there. Think about the decisions a practice owner makes off their financials. Can I afford to hire another clinician? Am I paying my team a split that I can actually sustain? Should I raise rates? Am I setting aside enough for taxes? Can I take a bigger owner's draw this quarter? Every one of those answers comes from your books, or at least should. If the books are wrong, the answers are wrong, and the wrong answers here are expensive. A practice that looks profitable because owner's pay was never recorded as a cost will happily hire and then run out of cash. A practice that can't see its real payroll percentage will approve a 60% split it can't afford and feel that squeeze for 2 years. An owner working off of inflated expenses will underpay themselves out of fear that isn't grounded in anything real. We've walked into all of these, and the owner is never careless. They were just steering with a broken gauge. Then there's tax time. Messy books means your CPA is either reconstructing your whole year from scratch, on the clock, on your dime, or they're filing off numbers that don't hold up. CPAs tell us all the time they are going to raise prices or just in general quote more for books that are not clean. We hear that all the time from CPAs that we know. The IRS is blunt about this too. Good records are what let you prepare accurate financial statements and support what you report. And a complete set speeds up any examination. Clean books usually means a better return, fewer year-end surprises, and less CPA time billed back to you. More than one owner has told us that the cleanup paid for itself and reduced tax prep cost. So here's the second reason, and it's the one that owners feel even when they can't name it. Clean books are the foundation, and without the foundation, none of the good stuff can happen. Every high-value financial move that a practice owner wants to make sits on top of accurate books. Profit first, if you've heard of it, only works if the numbers feeding your allocations are real. Clinician profitability, meaning knowing which clinicians and revenue items actually make money, is impossible if revenue and payroll are miscategorized. Real tax planning needs a true profit number, not a rough one. Honest cash flow visibility needs a clean starting point. Otherwise, you're just watching the bank balance and hoping. Coaching and strategy with a financial partner is only as good as the data underneath it. Garbage in, garbage advice out. This is the part that gets lost when people think of a cleanup as tidying up or just like an admin thing that has to happen. It's not cosmetic. It's the thing that unlocks the entire reason you wanted good financials in the first place. You can't build a second story on a cracked foundation, and you can't run your practice on numbers that you don't trust. Put simply, a cleanup isn't the boring prerequisite to the good financial work. It's the first piece of the good financial work. So if you're paying for a cleanup, what are you actually paying for? A cleanup is methodical. It's not magic. Here's the walkthrough of some of what happens. Recategorizing those misclassified transactions. Every transaction getting put in the right place where it belongs. So income is income, expenses are expenses, and those expenses are in the right place, not just all piled together in office supplies or something like that. Reconciling every account to the statements, banks, credit cards, loans, month by month, until your books actually match reality. Untangling personal from business. We like to separate commingled spending, right? So the real practice expenses really come into focus and really can see what's happening on the business side without a bunch of personal expenses kind of like sneaking their way in. Setting up a chart of accounts for a practice like yours, right? Structuring your financials so it reads for financials for a therapy practice, not just a general template that would work for construction or any other industry. Cleaning up the balance sheet. This is the fun one. Loans, liabilities, equity accounts, getting those sorted, getting rid of that opening balance equity, making sure that it looks like your business actually owes the money that it owes, not more or less. And just answering those questions that never get answered. The judgment call transactions that no one has ever resolved, we get those resolved. When it's all done, you have a set of books that you can really actually stand on. How long does this take? A typical cleanup runs a couple weeks. If it's 1 or 2 years of history, it might take 3 to 5 weeks. Cost scales with complexity based on how many months are getting rebuilt. It's a real number, it's a real cost. I'm not going to pretend that it's not. But weighed against what that mess is already costing. Bad hiring, bad comp decisions, extra CPA hours at year end, taxes miscalculated, and the slow, low-grade stress of never trusting your own numbers. In our experience, owners who come to us after a rough bookkeeping situation often are going to be able to save more on the cleanup costs just from the decisions they're finally able to make correctly. What does life look like after a cleanup, right? This is the payoff. You get that clean starting line for ongoing monthly bookkeeping so the mess doesn't just rebuild again. Your CPA can actually work with your numbers instead of around the mess that they are. You can finally see what's happening in your practice financially, which clinicians are profitable, where cash is going, what hire you can afford, and your monthly financial review becomes strategic instead of corrective. You've stopped cleaning up the past and you can start planning for the future. The shift from what happened to what's next, that's the entire reason clean books matter. And it's the difference between bookkeeping that documents your practice and bookkeeping that helps you run it. If you're looking for a cleanup or you want us to do a quick check-in on what a cleanup could cost, we're happy to do that. Schedule a discovery call. You can see that link below. You can also reach out if you need any consulting on what's needed for your practice. But this is the foundation. Everything else builds off this.